Do you want your hard money loan approved quickly? Most investors slow the process down without even realizing it. My name is Mike Chadwick and I've been in hard money for over a decade. And in this video, I'm going to talk all about how you can prepare yourself and make the process smooth and get your deal funded faster.
So a hard money loan is really just a bridge loan. It's really just a bridge loan from a private lender, an unregulated lender. So what are the benefits of hard money loans? Why do investors, first-time flippers, all the way to investors with thousands of units? So I've closed over $1 billion in hard money loans, and I can assure you one thing, not every project qualifies for hard money.
So you know from my other videos that it's not all about credit score. There are other factors that play into whether a hard money lender is going to be willing to make your loan. Next, I'm going to describe exactly what you need to focus on as a potential borrower to make sure that you're positioning yourself for a very quick response. We know from my other videos that hard money lenders typically aren't relying on credit score, borrower financial profiles. We're gonna look at the deal itself. We're gonna have a common sense approach, but that doesn't mean we don't need to understand the deal and need basic information on you in order to move the deal forward. What do we need, right? We need, as a lender, for you to come in prepared to talk about not only the property and its existing condition and what you're gonna pay for it, but also what the renovation requirement is. And be prepared to produce at least a framework for a budget. And then obviously we need to know that you understand the future value of the property and that ultimately it supports, in that particular context, a fix and flip strategy and ultimately a loan. So first off, know the numbers, understand the property, understand the scope of the project. That's key. Second, understand your exit strategy. That's an important factor. You may in fact be deciding to sell, you could refi, you may not have the credit to refi out. We want to understand that you know the market, you know the for sale market if that's the strategy, but that you also understand what the refi could look like, and that it's important for the underwriter or myself as an LO to make sure that that strategy pencils out in terms of profitability on a fix, and sell, or in terms of DSCR on a fixed to rent. So that's when we look at credit. We want to make sure that the exit strategy is protected and that you don't have to sell, but that you could refi in the end. So I think that ultimately is why you'll see a minimum credit score with companies like Asset Based Lending, who sponsors the video, of around 660, depending on your experience level. And that's a perfect segue into experience, which is everything to a hard money lender like myself, a bridge lender, a company whose focus is to fund residential transition loans. That's a fix and flip. That's a ground up construction. We'll want to see, as most of the industry will, a schedule of the real estate that you've transacted on, that you've executed, an investment strategy on, both projects that fit and are aligned with the scope of the subject property, like a fix and flip. You'll want to definitely put all of those in there. Then if you're doing new construction and you have experience doing new construction but also doing other investments in like fix and flips, it's important to know and understand your full profile as an investor, as a potential borrower. So as an experienced lender like myself, I can make sure that I'm customizing financing solutions, that you're ultimately using me to co-underwrite and structure it so that you're prepared to exit the deal accordingly, whether it be a for sale or a refi. Those are the main factors. We're going to talk about, we know the numbers. We know that we need to understand the exit strategy, both for sale and just as a fallback if your intent is to sell, a refi, and then finally, and not the last in terms of importance by any means, is your experience profile. And we're literally going to look at your experience in the schedule, and we're going to count the number of deals that are like kind and give you credit towards that experience and reward that experience with lower interest rates, lower borrowing costs in terms of origination fees, and as well as higher leverage, which means lower down payments. So those are the main, factors I would say that hard money lenders look for when a potential borrower approaches them with an investment strategy or potential loan opportunity. So you've got your numbers, your interest rate, your points, you've gone shopping, you came back to me because you realized that we're the best. Now you want to get your loan approved. What are the steps to getting your loan approved? So step one, before we just had the numbers, now we're ready to move forward. That means you have to have the documents to support the numbers. So if you're doing a fix and flip, and you're purchasing the property, we need to see the purchase contract. If you're refinancing, we need to see the HUD from when you purchased it. We need to see a construction budget. A template can be provided. We need to see plans if it's a new construction, and we need ultimately to get that experience worksheet to quantify your experience and then make sure that ultimately that experience worksheet ties to the original quote. If you just said you were a 3 experience flipper and I quoted you a rate of say 11% and 2 points, and you come to me and I see through your experience worksheet that you're now a 5, well, you might be a point lower in rate. It just depends. So we revisit all of the numbers. We want to make sure that we have documents in the file supporting those numbers. And then we move to step 2, which is the application. We never run credit or background or do anything that's going to impact your financial condition. As part of our application process is as simple as onboarding your contact information and the property's information. I'm taking that and I'm reviewing the application in the context with the documents. At that point in time, basically step 3 is we're going to have a conversation. We're going to want to make sure that all of the numbers align with what we originally talked about. I submit at that point, which is now step 4, into underwriting, and the underwriter picks up the file, reviews the file. They want to make sure that everything checks out. They call with questions, and at that point, the loan is approved through a very quick, what ultimately is no more than a 24-hour approval process, and a term sheet is issued. At that point, the appraiser is engaged. The deal is literally off, moving 100 miles an hour to a closing at that point, and we're into processing. So the process is very quick. And I know I laid out the steps, right? We had doc collection, we had an application, we had a quick call with myself to confirm numbers. We went into underwriting, the underwriter picked up, reviewed, and then ultimately a term sheet was issued, right? And that seems like a lot, but those steps really all happen within 24 hours. And when you come prepared, as you now will, that process goes so smoothly and so efficiently, and it just ultimately leads to all around better results for everyone involved, for sure. I realize I'm talking about this next topic in the context of a loan approval process that takes 24 hours and a bank process that you probably are comparing me to, which can take anywhere between 30 and 45 days. I've seen, no matter what you do, just seems like it just takes longer and longer. I do believe there are ways as a borrower that you can speed our 24-hour hard money lending process, and that's by being prepared, and we've talked about that. But there are other intangibles like being clear and upfront, explaining the project, but also explaining who you are as an investor. That allows a lender as experienced as I, with programs like ABL has, to be able to hopefully give you a white glove type experience as a borrower. So be clear and upfront, because that helps us not only structure this loan appropriately, but in order to really service you, I want to be able to make this loan in the context of your overall strategy, your journey as an investor. And that's important, I believe, in order to help you grow. The next thing is when you're dealing with a lender like myself, we're moving quickly always. We have a lot of transactions. And so it's important that you respond fast. If I'm picking up a transaction and I'm texting, emailing, calling, you want to definitely make sure that you're responding quickly so that I'm not picking up another deal in the meantime and putting your deal down. Things like that. Or if an underwriter calls you, be responsive, call right back, make sure that you're doing everything you can to help your lender move quickly. And then I would say, last but not least, it's important that you really make sure that you're dealing with a lender that's experienced, that understands the strategy, the market, and just what you're looking to accomplish as an investor, like I said, because it's going to go a long way in what you want, which is to establish a relationship with a hard money lender like myself, who can be there and watch you start as a first-time flipper and see you grow, because we can do borrowers. I mean, we've lent up to 10 million with borrowers. We can really help you scale, and you can help, again, speed up the process of getting these individual loans through and starting a relationship in general by going through and, again, being clear and upfront, making sure that you're responding quickly through the process to keep it moving, and then ultimately aligning yourself with a lender that understands what you're looking to accomplish as an investor and has the programs at their disposal to service the relationship. So I have a very low percentage of my loans get denied, but the ones that do, I would say, generally fall into a few categories. And that's the borrower really doesn't understand value. They're overestimating the after repair value to make the deal work. And we quickly pick the deal up. We see that, properties in the marketplace have only sold for X amount of foot in the last 6 months. We're going to go back and ask the borrower for comps. And ultimately, if you can't comp it out, the deal at that point is dead. I think that's probably one of the top reasons why a project or a loan gets denied. The other is underestimating rehab costs. And it's a similar situation where a borrower is looking to or hoping that a property is worth a certain value to justify the investment. Same thing goes for renovations, where a borrower can go in and say, I need it to sell for this in order to make a certain profit, then I'll make the renovation work. It's just not how it works, actually. In fact, you really need to make sure that you understand the after repair value and that the renovation is all into a budget that we're funding, and even then has a contingency, has a cushion to make sure that you have enough money to get through the renovation. And then you need to buy the property right. And the purchase price ultimately needs to be what decides a good investment in the end. So you never want to overestimate an ARV just to make the deal work and then find out later, either through underwriting or even worse, when the appraisal comes back, that it's not worth what it is and everybody wastes their time and you put your deposit at risk. And then the other is just underestimating rehab costs, where the appraiser comes back or the underwriter does a quick look at the pictures of the listing and it shows that it clearly needs a new bathroom and you're not putting one in and you're trying to sell it for maximum value. Obviously, the underwriter is going to have a problem with that, and we're going to want to increase the budget and then the numbers won't work. So those are quickly a couple ways loans get denied. The other is, I would say, is not really having a clear exit strategy that we can see as a lender and ultimately value out. If the borrower is really wishy-washy, borderline credit, really doesn't make so much sense as a flip on sale, underwriters can get nervous that the borrower's only exit strategy is in question with a refi. It becomes an issue. So you got to go to your lender with a clear exit strategy that you feel you can execute that's supportable. And without it, the lender is definitely going to hesitate and probably back off. And then I'd say finally, you definitely want to come to your hard money lenders in advance, understand their parameters, their metrics, pricing, interest rate points, etc., and prepare ahead, because you need to know that when you bring that deal to your lender, that it fits their metrics, right? So, coming to us last minute with a deal in hand, hoping that a square peg fits in a round hole isn't going to work. So you want to know that the loan programs are out there for your strategy. And while we all have different, focuses, groups like us, we have great fix and flip and great long-term programs, but sometimes the folks that have properties that fall somewhere in between are the ones that get denied on a bridge, because they're really not fix and flip candidates. They're really more just should be structured as a straight purchase in a long-term 30-year DSCR loan, as an example. Thinking that you'll just find a deal and then find a lender doesn't really work. Do your due diligence. Make sure you're aligned with a lender that has the right programs and that your deal fits their programs, so that you don't, in the end, put your deposit at risk, because no one wants to see anyone lose money in the process of finding a hard money lender to fund their loan. Getting a hard money loan is simple if you prepare. And I'm hoping this video goes a long way in helping you do just that. I want to thank Asset-Based Lending for sponsoring the videos. Please comment if you have any questions, subscribe if you want to see more content relating to hard money loans or just general investing. Thank you, and I'll see you in the next video.